Hey everyone, it's Saturday morning, March 29th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Before we get started, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, the stock market yesterday? Yeah, not great. All three major indexes closed deep in the red. The Dow dropped over 700 points. That's a loss of about 1.7%. The Standard & Poor's 500 fell nearly 2%, and the Nasdaq got hit the hardest, down 2.7%, led by another wave of selling in tech. What triggered the drop? A combination of hotter-than-expected inflation data and fresh tariff worries. The big headline was the latest reading of the Personal Consumption Expenditures Index. That's the Fed's favorite inflation gauge, and it came in pretty ugly. Core PCE rose 0.4% in February and 2.8% compared to last year. That's way off the Fed's 2% target and suggests inflation isn't cooling off anytime soon. Add to that, consumer sentiment? Not great. According to the University of Michigan, sentiment fell sharply in March to 57, the lowest reading since late 2022. So yeah, people are not feeling optimistic about the economy, especially with inflation sticking and the job market feeling a bit shakier. Now let's talk trade again. President Trump told reporters on Friday that he had a very good call with Canada's new Prime Minister Mark Carney, but when asked if he'd walk back the tariffs, he doubled down and said, quote, "Absolutely, they're still coming." That just piles onto an already tense week. Remember, markets started off strong with hopes Trump might ease up. But then Wednesday came, and bam, new 25% tariffs on foreign auto imports. That kicked off a sell-off that just gained steam all the way through Friday. Meanwhile, the Fed is trying to keep its cool. Jerome Powell keeps saying inflation from tariffs is likely transitory, but investors? Not so convinced anymore. One Fed policymaker even described the outlook as zero visibility in a dense fog. That's not exactly confidence-inspiring. And the latest GDP forecast from the Atlanta Fed? It now expects the U.S. economy to shrink 2.8% in Q1. That's a full point lower than just 2 days ago. So yeah, buckle up. With reciprocal tariffs set to kick in on April 2nd, things could get even messier. That's it for Capital Markets Quickie. I'm Endrit Sella. Catch you on Monday. And hey, don't forget to share the pod with your colleagues. Have a great weekend.